So we said that we record our reserve. We go to our general journal. We look for the information that were recorded in the current account that are to be recorded in the current account. So in this case, we have reserve. Sarah was how much? What is Sarah's reserve? Going back to the information. Sarah's reserve was 36,000 and Mary was 24,000. So 36 and 24. So we have 36,000 here. And then we have. And looking at that are the only information that we have in our journal entries that we had to record in our current account. Therefore, you balance off now. We now have to balance off our current accounts. Are there any questions? Any questions so far? Guys, are there any?
No question.
Okay, thank you. Okay, so balancing off a current account, we just do the same as capital account. So I believe you can just balance off now the current account based on how we balance off our capital account. So if you can maybe move on to the next question, which is the last one. Prepare the statement of financial position of Galaxy Sport at 1 January 2018, immediately after the admission of Mark, as well as the extracted statement of changes in equity, partners capital, current accounts in now the columnar format. So we need to prepare our statement of financial position and then also prepare our changes in equity account or statement. Okay. So this is question 5.
Is it question 5 or question 7?
I think it's the last question.
I wrote question 5. Question 7. Sorry, guys. So the last question, question 7, statement of financial position. Statement of financial position. So we have assets. That's the first thing that we start off with. Then we have our non-current assets. Now, under non-current assets, we have so what current non-current assets do we have there?
Land and building.
We have land and building. Land and building was how much? Now, land and building, remember they were reevaluated. Remember they were reevaluated. So you need to use the new values after revaluation.
Is 130, 700.
That 700,000 is now the new. The 130, that is the increasing amount. The increasing amount, it increased with 130,000. It increased from 570,000 to 700,000. So the increasing amount was 130,000.
Okay.
Yes. So it's 700,000. And then we have machinery of how much?
90,000.
Machinery of 70,000.
90,000.
Oh, yes. 90,000 of 90,000. So what is our total non-current assets there? We have 790,000, right?
Yeah.
Yeah.
Okay. And then
790.
we move on to our current assets.
Current assets.
Current assets there we have what? We have inventory.
Sarah,
Sorry, I think I forgot something. Yeah, I
goodwill.
forgot something. Yeah. Sorry, I just noticed
What?
that goodwill is also part of goodwill is a non-current asset. Yes.
Oh, yeah.
Yeah. Goodwill is a non-current asset, so it needs to be included in the non-current assets amount. So we have goodwill. Goodwill was how much? 192,000.
414.
Eh?
Oh,
No, the goodwill
192,
amount
yeah.
that we calculated was 192,000. So what is our total non-current assets?
It's
What is our total non-current assets?
982,000.
982,000.
982,000.
Yeah, 982,000. Inventory. Okay. What am I writing? And then we have current assets. The first one there we have inventory. Our new inventory amount is how much?
65,000.
65,000. And then we have accounts receivables. Our accounts receivables amount is how much?
144,000.
144,000. And then we also have our bank. Now in
Bank,
this
yeah.
case, remember our bank also increased, ne? If you check in our general journal, when Parker contributed 440,000, what happened to our bank? It increased. Are we together? So in this case, our bank balance was first 354,000, as per the old statement of financial position, and then we added 440,000 was deposited into the bank account. So how much will we have as our new bank total?
790. 790,000.
794,000. This boy. 1,000, like that. So what will be our total current assets? What is our total current asset amount?
1003,000.
Here's the top.
1,003,100.
Yeah.
Huh?
1003,000.
What the whole meaning?
1003,000, not 300.
1,003.
3,000. And zero, that 000 again.
Oh.
No. Yeah, like that.
Our current assets only. This, if you add these three amounts, 1,003,000. Okay, 1,000,000, 1,003,000. Lord. So 1,003,000. So our total assets will be how much? How much will be our total assets?
Yeah.
1,985,000.
Mm-hmm. 985,000. 1,985,000. And then we move on to equity plus liabilities. Equity plus liabilities. Under equity plus liabilities, we have capital.
And non-current. I mean current.
Sorry. First,
What am I saying?
start off with our equity. Ne? So under equity, we have capitals, ne? And current and capital and reserves if they were reserves. But in this case, the reserve was distributed among the partners, so you won't have any reserve here. So we have capital Sarah. Capital Sarah is how much? So where do we get this information from? Now you have to go back to your capital accounts, ne? Going back to our capital accounts. Capital Sarah has 470,200. Mary has 451,800, and then Paka has 440,000. So those are the balances that you have to bring to your statement of financial position. So capital Sarah has 470.
9,200.
9,200.
9,200.
479.
No.
479.
Where are you getting
No,
the 479?
479, not 470.
We are here, not the balancing figure.
Oh.
We use, remember we
Oh.
had to calculate our balance carried down. Eh? These ones are, guys, these ones are just balancing figures.
Yeah.
That's why they are recorded on both sides. They help us to find our balance carried down. So currently, our balance is 470,200. And this is what we have to use, your balance carried down. Are we together?
Okay.
Do we
Yes.
understand?
Yes.
Okay.
Yes.
So we move on. 470,200. And then we have capital Mary.
451.
Capital Mary has how much? 451.
451, 800.
800. And then capital Parker.
440.
Of
440.
40,000. Okay. And then we have current account balances. Current accounts. We have current account of Mary. First of Sarah. Let me just write it this way. Mary. Or you can write it the same way I wrote it, the same way I wrote capital, where you have current account Sarah, current account Mary. Or you first writing you first write the heading, which is current accounts, and then you have Sarah, you have Mary, and then Parker. Sarah has how much? Now in this case, remember we did not balance off our current account, ne? We did not balance off our current accounts, but looking at this, we have zero, ne? We have zero this side. So what we do is we just need to add these sides together, this amount together. So 2,085,40 plus 36,000 will give us how much?
244,540.
So current account Sarah will be 244,540. Okay. And then Mary, if you had to add her information together.
Mary's information is 153 460
153
460
4
60.
60.
Mm.
Okay. Then we move on. Parker has nothing, right? So we put 0 there because there's nothing.
Sorry, Sarah, scroll a bit to the current account.
Okay. Oh, mosquitoes. There it is.
Okay. Oh, okay. It's 540. Okay. No, it's fine.
Okay. So what is our total equity in this case? Let's add all these amounts and the equity together. How much will we get?
Okay.
How much will we get? Total equity?
We're activating them.
Okay.
1 million.
10.
1 million,
760.
760,000. 60,000.
Like that. Okay.
Yeah,
1,760,000. Okay. And then we move on. We move on to liabilities. Liabilities. We start off with our long-term liability or non-current long-term liability. In other words, non-current, whatever word you use. Okay. So under non-current liability, we remember you're also using information that have to do, that are in the financial position. You compare, ne? So under non-current liabilities, there we have borrowings, mega bank, and they were not affected, ne? They were not affected by the admission of a new partner. So you just write the amount as it is. Are we together?
yes.
That borrowing was never affected by the admission of Parker. So you just record it as it is, mega bank of how much? Of 80,000. So that is the only long-term borrowing that we have. And then we have current liabilities. Now under current liabilities there, we have accounts payable. Accounts payables were also not affected, right? So accounts payables, we have 141,000. Take note that you can be given a question where your accounts payable were also revaluated. So if your accounts payables were also revaluated, make sure that you use the new balance of your accounts payables. The same way we used our new balance of our accounts receivables. They can also be revaluated. And then we have interest accrued. Interest accrued is how much?
4,000.
4,000. This was also not affected by the admission of a partner. So our long-term borrowing is how much?
225,000.
225,000, eh? So
Nope. Nope.
How much?
That one is 8. That one is just 80.
Oh no,
The
sorry.
long term is just
I actually
80%.
no. I actually wrote at the wrong column. I wanted to write under liabilities. What are our total liabilities? Total liabilities are long-term liability plus current liabilities.
Oh, 225,000.
225,000. I actually recorded it on in a wrong row. That's why I had to erase it.
Okay.
Yeah. So total equity plus liabilities will give us how much? I'm almost done. Yeah. Total equity plus liabilities will give us how much? What are you eating? Are you full?
985,000.
And looking at this, our total assets equal our equity plus liabilities. Therefore, our statement is correct. Any questions?
For now, it's not making sense.
Are there any questions, or is there a part that you still do not understand, so I explain?
No questions, I guess.
Okay, no questions.
No questions.
Okay, so we are left only with changes in equity. Now, when it comes to changes in equity, this is just a statement that shows how your equity balances have changed. Ne? Remember, your equity is made up of your capital, your current accounts, your reserves if there is, and your appropriation account. But in this case, you are only asked to focus on your capital and current account. So we only have to draw up now our changes in equity based on our capital and current accounts. I think because of time, I'll send you the solution to now the capital and to the statement of changes in equity, so that you can go through, because we only record the information taking from our current accounts and our capital account. And then on Sunday, before starting off with a new partner, I'll quickly explain it, if that's okay.
Okay.
Yeah.
Okay.
Yeah, I'll send it now on the group.
Okay.
Thank you.
Well, thank you very much for attending today. Have a blessed night ahead.
All right. Thank you so much.
Good night.
Good night.
Night.
Night. What is it, Nilo? Why do you want your phone? Are you going to sleep? Don't need the phone now. It's late. See, I'm just recording. How are you going to